Turbo Trading with head trader Robert Knight, MBA.
Okay, this is a video on the state of the market where we're at right now. And the question really is, should we buy or should we sell? Do we try to catch a falling knife? Is this the 10% correction? And then we go, everything's just super accelerated, or is this just a bit of a bounce in the start of a bear market? So, and that's the $64,000 question. Because I'm short, or not short, well I am short, because I'm long the ETFs, the bear ETFs, TZA, FAZ, SQQQ, I bought some VXX, we're long SOX from before. I didn't trade LABD, I'm sorry I missed that one, I should have done it because I knew it looked bad. But the UVXY, these are all the bear ETFs. And let's have a look at the market here. This is the SPX. This is off 12.37% from the high here at the 1st of January to the low today. That's 12.37% in 3 weeks. But most of that acceleration is just in the last 2 weeks. And look at the volume. Absolutely capitulation type volume. Now, if this gap, this sells off, if this gapped up, that would be an island reversal. And that would be a bullish sign that this is just a correction, a 10% correction in the market. It's a very, very tough call right at the moment. And so I'm not looking to buy until we get a confirmation. And I'm not looking to add to the downside yet either, unless we get a confirmation that this is, if it does take a bounce and it's just a dead cat bounce, then we'd look to add to the shorts. But to try and short stocks now, after the sell-off below this key support at 45.50 and 4,500, I put out on Wednesday, I put out a big short list, and that list is off significantly. But everything is off significantly, so it's not like I'm a rocket scientist. I just looked at that and said, okay, this market's going lower. And so there was a lot of very good trades to take. And we put on a couple of swings on the bearish ETFs. But now what do? Well, for now, we just sit on our hands. We keep our position that we have. And I know it's very confusing. What do we do? Is this the 10% correction and then it bounces, or is this a continuation? So the next couple of days are going to be key for us to make a determination on which way this goes. As I say, if this bounces tomorrow, gaps up tomorrow, then that's an island reversal. And it could be then that this is just the 10% correction that the markets were looking for before we carry, just revaluing a lot of the positions and a lot of the stocks because they got way overbought. Now, I did say a couple of weeks ago, this is typical topping pattern, huge volatility, and in the markets, big swings. And we tried a couple of times, and that's one of the problems is that if you're in the know, if you are able to understand what the markets are doing and where they're going, sometimes you tend to be too early. And so we tried a couple of times in here, and it turned out we were too early. But we had the right idea. Got stopped out, but then look at this absolute death drop, really. 20s cross through the 50, falling like a rock. So we're not looking to add to the shorts. We would look to add to the shorts if this consolidated in here and maybe traded back up to 4,500 and then rolled over again, because then you'd have close to a 50% retracement, Fibonacci, 45.50 maybe. And then if it rolled over there, then you'd look to short again and take the market down to this 4,000 level. But if it's an island reversal and starts to go, because don't forget, we're coming into key earnings right now. This is the earnings season. And so if these stocks are all sold off and earnings are reasonable or good, then the price earnings ratio is going to will be relatively interesting to the markets. But I mean, look at this this Netflix though. It dropped $100 and down $150 in 2 days, and the earnings weren't so bad. I mean, they were, but the market is readjusting it and then absolutely getting crushed. But readjusting the price earnings ratio based on what their earnings were and what inflation is, or not inflation and interest rates. Because don't forget, the calculation of price earnings is a function of interest rates as well. It's a very complicated subject to be. It's too long of a subject to deep into a deep discourse on it. Just suffice it to say that interest rates going up are bad for markets unless the earnings or the economy can take over from the Fed withdrawing its liquidity from the markets and allow the interest rates to be adjusted. Well, they're up, but be in a sense adjusted by the price earnings of the stock market. And that is what I'm trying to say, is that even though rates go up, it doesn't necessarily mean negative to the markets. If the economy stays strong and price earnings, the earnings are very strong, then the price earnings will adjust and the markets can go back up, can continue to go higher. But this is an absolute, massive sell-off, absolutely crushing the markets. Fortunately, we were on the short side on some of it, so we were able to hedge our positions, our long positions. But broke down through the 20 here. Now this is really looks like this could be a capitulation type trade, and we were getting extremely oversold. I've been saying that for I said that a few times this morning. The McClellan oscillator got down to negative 274. It's now 224. That's extremely oversold. And then the stocks above their 40-day moving average, 17.6, but it did get down to 12.5. It's very extremely oversold. And of course, VIX, very bearish here, above 30, above 25. So, we would expect markets to bounce in here. But the key point is it a dead cat bounce? Or is it just a 10% correction in the market and away we go? We'll need a couple more days to decide. So if you're short stocks, doesn't hurt to cover in here and then wait for a couple of days. But I don't think I'd be a buyer quite yet. I think you have to wait.
Don't forget to like and subscribe to our channel.